All right, good morning, traders. TG Watkins here. It is February 8th when I'm recording this. Hope you guys are having a good morning or a good weekend. This market has been kind of wild for the last couple weeks, hasn't it? It is also February, so it is seasonally weak, but there are still quite a few strong names out there. Okay, so just because the indices and the mega caps are not really moving doesn't mean nothing else is moving. In fact, we had a great trade on AFRM that popped up on earnings, so we've been doing all right out there. Anyway, I wanted to let you guys know, since we're just around the corner from the money show, it is going to be, I'm having two presentations. One of them is going to be Tuesday morning. I think it's at 8:30 if you guys want to check that out. But then also I'm going to be doing Wednesday, February 19th at 2:45. So yeah, come check it out, see the whole thing. If you guys find me, come say hi. It would be great to put a face with a name. And yeah, good to see other people and traders out there that we connect with. So then here is the list that I'm going to go through for those of you out there on YouTube and in the central room and all that kind of stuff. This first section will be kind of a market update, going around, kind of seeing what's happening out there, big picture. And then for the Moxie subscribers, you can come over here, and this is where we're going to be diving deep and talking about the names that we are trading and the ones that we're looking at and looking to take action on. So if you guys are interested in becoming a subscriber, we're doing $7 trials for 30 days if you want to come check it out. Otherwise, you can sign up, get the Moxie indicator, all that kind of stuff, and you can do simplertrading.com/Moxie. Okay, and then remember, this is for educational purposes only. And then as far as you guys can see here, the first section I'll be going through, we'll talk about whether it's bearish versus sideways breadth, and then the Michigan inflation data. So let's kind of go through that. Now, on Friday, when the market got yanked down from the University of Michigan inflation expectations, a lot of people in the chat room were kind of thinking, oh, this is going to be bearish, the market's going to roll over, and all that kind of stuff. It could totally happen. It is possible. And as far as the Moxie indicator goes, a lot of people are talking about this being an inverse trampoline move. That is possible too. But I am seeing some differences between what I would be normally looking at on the hourly chart to show bearishness versus maybe we're just in a consolidation mode and maybe the market just kind of chops sideways for a little bit. So because the market isn't totally falling apart out there, and because we actually rebounded very, very nicely from the CPI and after a 7-week pullback, and because we got bought up after the DeepSeek news and we got bought up after the tariff news, I'm going to think towards this market. I think is actually fairly strong. It's just not ready to move right now. And until I'm proven otherwise, until most of our positions don't work, I'm going to be leaning towards things just kind of consolidating, and that this market is actually looking like it just kind of wants to go sideways, maybe down a little bit more, but mostly sideways. I don't see it as being bearish. So I still look here, and we're still over the monthly 10. In fact, part of what I've been concerned about is we've been needing to fill the gap that is between price and the moving average. And so I would say give it some more time, and it'll flag sideways a little bit more, and that way you can start moving up again. So we'll see if that happens. And we are at least still here at the weekly 21. So if we do start to break down below the weekly 21, okay, I'll start talking a little bit differently. But until we do that, I'm going to say that the weekly 21 is still strength. And you know what? If we need to test it twice, that's okay too. You can see we bounced off of it once, and we're still kind of hanging out around it. And then on the hourly chart, it's just kind of inconclusive. We did come up here and we pretty much hit this upper resistance area, upper trend line. In fact, I think I drew a different one. Let me see. I think I have it on right there. So you can see that one is where we actually hit it here. And so yeah, that's part of, from a technical standpoint, I was thinking that instead of this diagonal, I thought we were going to more hit like a horizontal and come up into this area on Friday. But man, that Michigan inflation expectation data came out and just totally took the market down. And I'll get to that in a second. So this is kind of what I'm looking at. And if we look at breadth, so let me show you here, we can see that yes, in fact, underneath the surface, we are getting multiple names pulling back. The majority of the market is pulling back a little bit. As I said, there are still names going up. We have been succeeding with them. We've had some really good trades this week, actually. But you can see here that there is kind of a lack of participation. And again, that kind of makes sense because what happened? The number of stocks over the 20-day SMA hit 80%. And if you look back, 80% is about the high that this thing goes. Now the question is, if it's really strong, it can stay up there. But otherwise, you kind of see it gets up there, pulls back, gets up there, pulls back, gets up there, pulls back. And, it got up there and pulled back. So this makes a fair amount of sense given that it's February and also given the internals that we're seeing. And you look at the 50-day, well, it's kind of just hanging out. It's actually not bad, it's not good. It's really right in the middle. 50% of stocks are over their 50-day SMA and 50% are below. And so I'd say this is fine. Everything got bought up off the lows and now it's going sideways, and hopefully the next move is to the upside. If this does start to roll over in a more meaningful way, then we've got some problems and we can talk about that. Okay, now as far as the Michigan inflation data, one of my subscribers in the Moxie Room posted this, and he got it from Tom Lee, so pretty respected person out there. And I'm not trying to make this political. I think that it's one of those things that we need to understand too. So as market participants seek to understand what this number is, it's not actually the inflation number, it's a survey. And it's a small group of people that get called, and it's got some political leanings. And I think if you guys can look past your own political understandings right now, there have been lots of data in the past that suggests that if you ask somebody who is a Democrat, hey, how's the economy right now? And if a Republican is the president, they're gonna be like, oh, it's not good, I don't like it. But if a Democrat is president, they're like, yeah, I think it's great. So, and the same is true for Republicans, just flip it around. And I think that this is one of those things that we need to understand, that whether we're Republican or Democrat or somewhere in between, if the opposite party is in power, we're probably not going to be super thrilled about it, right? And so we don't like their policies, we don't like their outlook, and so we're probably not going to be thrilled about the economy that president is operating. And this kind of is reflecting that. Look at Democrats right now, because we have a Republican as a president. And look at the Republicans of what they think that future inflation will be like. This really just kind of goes across party lines. So I do think we need to understand this as far as what that consumer, where the Michigan inflation expectation number might actually mean. Okay, so we should probably wait for the actual inflation numbers to come out and see if they continue to trend this way or not. And I think that this mostly just spooked the market. And so I'm kind of wondering if this is a legitimate thing. So I'm not going to put too much weight into this, and I think I'm going to let the charts tell me what's up, because I don't think that this is really going to tell me that the market or inflation is going to come roaring back until it's proven, and that that's kind of where I'm going to be standing, and that this was more of a, yeah, it spooked the market, but also we could see that the market was up here at resistance. So that's where I'm going with on that one. And then if we talk, breadth, inflation data, bearish versus sideways. Okay, here's the SPX, talked about that. And then we talk about the NASDAQ, and again, I just don't see this as being too problematic yet. Yes, the Moxie indicator is below zero. I'm keeping an eye on that. What it can mean is don't go long right now. And you can see that the market, the NASDAQ, is still having troubles breaking out. And so given that we have been pulling back for 7 weeks and then going sideways for at least a month, there's no momentum. And so that might be what is happening here with the indicator, is there's just no momentum on the daily chart. I mean, look, we have been in this box for, since December, and now it's February. So almost 2.5 months. And so there's just no momentum. And so until we really start to break down and actually, follow a downtrending moving average on the hourly chart, I'm going to go with we're mostly sideways. And so what can happen in a sideways market is if it starts to strengthen up again, this can go right back up. Okay. So it's a little inconclusive right now, but I'm not going to be going to cash and getting out, because I still think that this market is pretty darn good. And you can see here on the weekly chart, everything's still basically intact. I just don't see any problems yet. So I'm going to be, holding off on any bearish opinions right now. And then if we look at XLK, this is another one that quite a few people have been talking about. And you can see that XLK, it's been a little bit under pressure. And you can see since basically December, that's when the whole market started pulling back. And we've had some ups and downs in there. But if you notice, it's still pretty much in a channel. This really isn't too bad. It's just kind of consolidating, pulling back slightly. It's not bearish yet. And if we look at the higher time frames, it's still the same thing. We still have the weekly 8 over the weekly 21. We're still above most of these moving averages, and they're all trending up, and we are still technically over the monthly 10. So I'm leaning towards the side of consolidation and taking a break rather than anything else. And for those of you in the Moxie Room, to maybe help further explain Friday's move from a technical standpoint, look at the 5250 right there on that hourly chart. So amazingly, the internals, or like the technicals and charts, actually lined up with the news that came out with that inflation expectation stuff. Okay, so then we look at the IWM. And again, a big picture, if we look at the monthly and weekly, I really don't see anything too alarming yet. We are still just flagging into an uptrending monthly 10. We are still basically sideways on the weekly chart, and we still have the weekly 8 over the weekly 21. This isn't anything bad yet. And then if we look here, and actually I may just come over to a bigger one. So if we look here on the daily and the hourly, we almost got past the daily 50. So again, until this is really proving itself, and we still have the 8 over the 21. Now, again, I'm aware that the Moxie indicator is below 0, okay? So yes, this could lead to something negative, but it could also lead to something positive. It's really just neutral. We are very, very sideways. And what we're trying to do is figure out if the daily 50 is in fact going to be resistance and we start trending lower like that, yeah, that's going to be bearish. But what if we just kind of do this for a while and eventually we start to actually go back up? That's going to be bullish, and then the Moxie indicator will pick up. And if you look at the hourly chart, again, we're very neutral. We do have the 50 over the 200, but we are sideways. So, and what I'm kind of seeing for now and what I need to see into the future is notice that the 200 was in a downtrend, now it's flat, and now it's actually trying to turn up. So you can see that it's trying to change directions, and all we need to do is see if it continues to go that direction. If price starts to fall back down and fail and then actually be guided downwards, then yes, that's going to be a problem, and we'll start discussing that at the time. If we look at the Dow, still pretty strong. In fact, it basically went right up here, previous highs. And so this makes sense. It's digesting. You don't want to be like a game of whack-a-mole where you want to be the first one to be the one breaking out. No, it's going to come up here. It just ran a huge sprint to get back up to previous all-time highs, and it's probably going to take some time to digest that in order to get ready for what I hope to be is the next move to the upside. This makes a lot of sense that it's really just kind of backing and filling and flagging sideways. I don't see any problems yet. And if we look at XLF, it's kind of the same thing. This thing was wildly overbought. I mean, look how stretched that got and how stretched this got. And, price up, and we are starting to see some negative divergence. That's okay. This could really use a break because it just did a sprint to get back up here, and it is making new all-time highs. So again, I don't see anything super bearish about this. I just see that certain markets in certain areas are needing to take a little bit of a break after recuperating, and then maybe the whole February thing, because February is seasonally weak. All right, and then SMH, SMH is kind of off on its own because of NVIDIA and all the DeepSeek and AI stuff. So this one is fairly weak. I have said that ever since the DeepSeek thing came out, I do think that NVIDIA is no longer bullish. And I said SMH is really no longer bullish. I am concerned about it starting to break off and fall below its weekly 50. We are getting a Moxie price trigger to the downside, and we are below the monthly 10. So yes, this one is not good. This one is problematic. And you can see we are, in fact, underneath these moving averages. This is why I'm talking about that if we are going to be bearish, this is starting to look bearish. We have the 50 below the 200. Yes, the Moxie indicator is below 0 there. And we got a fresh Moxie price trigger to the downside. And this could be a bounce in what could end up being a downtrend. So yeah, I am not bullish on SMH. And I think it's mostly attributed to NVIDIA. Because if you look at ARM is actually looking great. So there are areas inside of the SMH that are still looking good, and I'm chalking it mostly up to NVIDIA as being the problem child. Okay, then if we kind of look over at the put-call ratio, unfortunately this still doesn't really tell us too much because the put-call ratio has been just kind of unreliable for a year or more because it's just been so low. The only thing that really helped us was this right here. We got a big print. I think that was Monday from the tariff news, and that kind of helped put in the bottom on Monday. So we got that big print, and then we got another one here, and then the other Monday, DeepSeek. So the only thing I'm seeing are kind of like daily readings of when this thing gets spiked. That kind of helped put in a low for the day. But as far as any kind of major trend change, it's been very, very unreliable because it has just been so low for so long. So I haven't been able to really use much with that. And then if we look at the UVIX and the the VIX and all that, we come over here and let's see. I think The only thing I left you guys off with last week was basically, yep, there's a double bottom, there's some positive divergence, and I said, yeah, there is a possibility that we could move up. That was Friday going into Monday because of the tariff news, and you can see, yes, it already started going up on Friday, and that continued on Monday, which is where I said, yep, that's a possibility. And that happened, but once again, we spike, and then came back down. So we are not getting a trend yet, but it's possible. So we are holding the level. We do have some divergence here. It is starting to hold the 15-minute 50, so it is possible that, if the market does want to go down, this is ready to go up. But we also know that if the market decides to finally change course, this could try and go up, and then just roll over. Okay, anything's possible like that. You can see that where we had a double bottom, went up, and then down. So maybe it just needs to build in a little bit of stuff to, basically maybe it needs to get some altitude before it can go lower because it's already pretty low. And so maybe if we do get it a little bit elevated, raise fears a little bit, raise volatility a little bit, that'll give it some more room in order to go down. Because, VIX is hard to go low when it's already low. It needs to get higher in order to go lower. And so that's kind of what I'm thinking. Okay, so that kind of takes care of us for the overall market. Remember, if you guys want to come over to the Moxie Room, simplertrading.com/Moxie. You can see me trade every day, all day, and the live trading that we do. A lot of stocks that are really great to be trading out there still. In fact, we just put on another trade on Friday before the bell, and we'll see how that works out. So yeah, we've been having a good time. Hope to see you guys over there.